Hey guys, Ben here. What is the intrinsic value of a stock? That is a question many of you guys have asked me on this channel, and it seems crazy. We live in this investing world, everyone's investing in stocks, everyone's making a heap load of money, yet people still don't know exactly how to value a stock. What's a company's true value? Because in the words of the great investor Warren Buffett, price is what you pay and value is what you get. Airbnb going public at over $80 billion. Is that fair value? Amazon with a market cap of $1.6 trillion. Is Amazon fairly valued at $3,000 per share? Can it go higher? Can it go lower? In this video, we're going to find out. I'm going to deep dive into a valuation model I've created in order to calculate the intrinsic value using what's called discounted cash flow for a stock. Now, before we get into that, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. And if you wish to take things one step further, hit that first link in the description below to be taken to the Patreon page where you can check out the VIP membership group. This is a special group I set up after many requests from you guys. There you can gain access to exactly when I'm buying and selling stocks, so you guys get the early alerts and the inside scoop. In addition, you get access to my entire investment portfolio, the stocks, and the story of how I grew that portfolio from just $20,000 to over $200,000. So if that's something you wish to find out more about, hit that first link in the description below. I've made a whole video detailing all the different tiers and packages. But with that being said, let's dive in. Okay, so firstly, what is intrinsic value? Now, intrinsic value is the present value today of all the expected future cash flows of the company. So with investing, the only reason we are investing today is in order to get more money back from the company in the future. So let's say you have $100 today in your hand. That's actually worth more than $100 in 2 years' time, which somebody has promised you. Firstly, due to the risk element. Secondly, due to inflation. Then you've got the opportunity cost and the fact that you could actually use that $100 today to actually use and live in your life with. Warren Buffett explains this in a very interesting way. He uses an old saying, a bird in the hand is worth two in the bush. And as investors or stock analysts, our goal is to try and determine how many birds are in the bush, what's the likelihood of there being birds in the bush, or sometimes there are even no birds in the bush, as was the case with Nikola. Disclaimer before I get sued by Nikola, I'm not invested and I haven't shorted your stock. Now, the great investor Howard Marks, who is the founder and CEO of Oaktree Capital, suggests that when investing, we should look at different scenarios. So we should look at a best case, a worst case, and a likely case for the stock in question, because it's no good being completely bullish on a stock and it's no point being completely bearish on a stock. We need to look at both sides of the story and what's the most likely case from a probabilistic point of view. So for those in the VIP group, you'll know my investing strategy. When valuing a company, I talk about quantitative and qualitative analysis. Now, don't let those words confuse you. Quantitative is just the number side, the cash flows, the revenues, the earnings of the company. And qualitative is the intangibles. These are the things we can't really touch, such as the great management of a company. For example, Jeff Bezos, he's the founder and CEO of Amazon. He's an exceptional manager, an intelligent, passionate investor who's got skin in the game as he still has a large portion of his original Amazon shares. But how can we actually put a price on that? It's very difficult to do from a valuation point of view. So really the easiest way to look at a company is to just look at the quantitative side, try and translate the qualitative stuff, the competitive advantage of the company, the brand of the company, into numbers as best we can. For example, we could say Apple has a fantastic brand. Due to its fantastic brand, it actually has pricing power and it can sell its products at a higher price. Thus, it has better margins than its competitors, which is a true fact for Apple. So with that being said, let's dive into this valuation model. So I've got three scenarios here. I've got an average case, a best case, and a worst case for Amazon stock. Now, let me just talk you through exactly how I've calculated this. Don't let these colors and numbers confuse you guys. I'm going to really break it down really simply. So here for step one, I've implemented the cash flow for Amazon. So what's the current free cash flow for Amazon stock? So they have around $27 billion in free cash flow. So I've just put 27 there. Then I've taken analyst estimates for the growth rate for Amazon. So over the past 5 years, Amazon has grew at approximately a 27% growth rate. It's actually grew faster in 2020 due to this global health crisis. So if we say Amazon's growth rate for the next 5 years, we're expecting approximately 27%. That's what's predicted by many analysts. And then 5 to 10 years, as Amazon gets super, super large, so the bigger a company gets, the harder it is for it to continue to grow, no matter how good the company is. Now, I did a video called How Large Can Amazon Grow To? And that is a video you have to watch because it explains this whole size thing. I also did a video on small caps versus large caps. I'll leave those both in the description below. Small caps can grow faster, large caps grow slower, but are less volatile. So if we say a 15% growth rate for the next 5 to 10 years, this is in the average case for Amazon. Discount rate. Now discount rate is your required rate of return. Now, generally, this could be the US Treasury rate, because that's the minimum risk-free rate, apart from all the US money printing going on. But it's the risk-free rate. Generally, though, I expect around 10% returns. That's what I'm looking for at least. So I put that as my discount rate. You can play around with various figures. Feel free to download the spreadsheet if you're in the VIP group. So terminal multiple, this is the multiple on the stock. This could be the price to earnings ratio, the price to sales ratio if it's a growth stock. I've just put 30 to be very, very conservative. Amazon is currently trading at a crazily high PE ratio at the moment, but I've just put 30 to be conservative. Because with valuations and estimates, it's best to be on the conservative side. With all that data computed together, the present value of Amazon stock from all that data is $2.3 trillion. Now, if we dive into the share price here, we can see the current market cap of Amazon is $1.6 trillion. So that basically means in the average case, you can expect an increase of around 42% on Amazon stock if you invested in it today, using those numbers I've used right there. But that's the average case. What about the best case scenario? What about all this crazily new stuff that Amazon has got going on, all this madness that's going on? Let's talk through a few of them real quick. So Amazon is actually becoming more and more vertically integrated. So they've actually bought a fleet of cargo planes and they've called this Prime Air. Amazon has literally taken over the world. I believe around 50% of the US population, over 50%, are Amazon Prime members. They've got Amazon Video, Amazon Music. They're in so many verticals, it's crazy. They've also got Amazon Fresh. They've got cashierless free stores where people can go and purchase products. They're doing home grocery delivery. Amazon is smashing it in so many different areas. But that's all. Amazon is increasing its efficiencies in its warehouses, which are basically like a Terminator movie. They've got drones everywhere. They've got so many different robots going around the factories, all to improve the efficiency, which will thus improve the margins and the cash flows for Amazon. I also found out something really interesting about Amazon stock. So they're actually working on some secret home robots, and I think this is a fantastic idea. We live in 2021 right now. We're going into the 2020s. Sounds so futuristic. How come we don't have house robots yet? How come I still have to iron my own shirts? We need these house robots. This has been predicted for so many years. How complicated can it be? And I'm sure a company like Amazon investing into these risky but high reward bets will definitely benefit Amazon. Think of this robot as like a little robot with an Amazon Alexa built in. So as you talk to your Amazon Alexa, you'll talk to the robot and say, "Robot, can you clean up? Robot, can you do this, do that?" Now, this is also speculation, but that's why we're putting it in our best case scenario. So we're not saying this is a current moneymaker for Amazon right now. The current moneymaker for Amazon right now would be Amazon Web Services, which is the market leader in cloud services. And that's what we've included in our average case. But for our best case, we're including all these other diversified bets, which are definitely paying off for Amazon. With all that, I'm still being quite conservative here. I've set a growth rate of 30%. Next 5 to 10 years, that'll drop to 20%. The only reason I'm conservative on these numbers is due to Amazon's size. If this was a small company and they had all this going on, or even just the e-commerce at such a high scale, their growth rate will be 50% easily. Discount rate 10% again. Terminal multiple, so I've given it a higher multiple because there's more optimism behind the stock of 40. That gives us a present value market cap of $3.8 trillion. So basically from today, in the best case scenario, you're looking at 2.3x if you invest into Amazon stock today. But hold your horses, guys. Before you run off and go invest into Amazon stock while I'm still talking on this video, give it a big thumbs up first for the info so far. And let's dive into the worst case scenario, because that is what we really need to know about. Worst case scenario. So let's say due to Amazon's gigantic size, things start to slow down. Let's say they get some more bad press for their warehousing conditions. Let's say a few big governments come down heavy on Amazon, maybe an antitrust investigation, maybe they try to break up Amazon, that could definitely cause the stock to plummet. It could cause the multiple on the stock to be decreased as there's less optimism baked into the stock. In that case, in the worst case scenario, growth rate, I've dropped that to 20% from around 27-30%. 5 years, I've dropped that to 10%. 10% discount rate, multiple of 25, which is still fairly good. That's the average for the S&P 500. You're looking at a present value market cap of $1.3 trillion, which is lower than it is today. So that's around an 18% decrease from what we can see today. So best case scenario for Amazon stock, if you invested today, you're looking at 2.3x. Worst case scenario, you're looking at minus 18%. Average case scenario, you're looking at a plus 42%. Now, if you're interested in actually finding out where I get the numbers from in terms of cash flows, revenues, etc., you can actually use the financial statements of the company, or you can use Stockopedia, which is a partner for this channel. I'll leave a link for those guys in the description below. Those guys have been with this channel from day one. You get 25% off when you guys sign up. I think it's an exceptional platform. I use it all the time to analyze stocks. Very in-depth. They've got so many different screeners. It's a very advanced platform. There's a lot going on there. So it's definitely a very interesting platform. Feel free to check that out. I'll leave that in the link below. I've given a 60% chance to the average case. This is just my personal opinion. Best case, 20%. Worst case, 20%. And what this will do now, this valuation model, do an average of those. So that gives a market cap of $2.4 trillion. And then what I've done is divided that by the number of shares outstanding, which are around 512 million. And this gives a value per share for Amazon stock today of around $4,700 per share. Now, the stock today is $3,200 per share. So it's actually trading below its fair value from those calculations, which I've done right there. So, okay, so that's Amazon stock. I'd love to hear your thoughts. What do you guys think of Amazon? Do you think it will 2 to 3x? Do you think it'll only increase by 40%? Or do you think it will drop by minus 18%? It might do all three. So I'd love to hear your thoughts. So please do comment those below. Also, do you think Amazon's size will hold the company back? Because to me, that's the only worry I have in my mind right now. And that's why on this channel, I'm constantly investigating new small cap IPO stocks, because those are the ones with the most upside potential. And if you guys haven't joined the community yet, what are you waiting for? Feel free, join the investing family by hitting that subscribe button and turning that notification bell on. And if you want to take things one step further, first link in the description below to be taken to the Patreon page. Check out the VIP membership group, full video there outlining all the different tiers and packages. You get access to my buy and sell signals, so when I make my moves, you can make your moves, in addition to my entire investment portfolio, the stocks, and the story of how I grew that portfolio from $20,000 to over $200,000. But that's not all. You also get access to our private Discord chat. This is a family of like-minded investors all moving towards a successful point in their life. That is a place you guys can be a part of it and get access to the inside scoop by speaking to me directly. And when I've actually got time, and as long as the group doesn't get too large, then I will be able to dedicate more time to you guys to speak to you individually about your portfolios, or just about life in general, or other investments such as property, real estate, etc. But my suggestion would be to join the VIP membership group as soon as possible, because the smaller the group is, the more time I can give to people. As it gets too large, it's going to be really, really difficult. So the earlier the better for you guys. With that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.